All right, folks, welcome back. This is ICT with the Mentorship Midweek Review. This is the dollar index daily chart. And I'm going to keep the charts clean. I'm just going to pull out what I believe is most important. And you can annotate your own charts and mark them up as well. The market trades down into the volume imbalance, which we're looking for. We had a sell side imbalance, buy side inefficiency here. We just about closed that in, but we also have a small little volume imbalance right in here. So we could see it trade up there, and then it'll be critical at that point as to what we get after. It may just trade up here, maybe 1 or 2 days of consolidation, and then resume going lower, then attacking here. The economic calendar is kind of light on Thursday. We get a 8:30 in the morning high impact USD driver on the calendar. That's the only real, in my opinion, volatility injection for the remainder part of the week. But we'll see how we trade in here. I still like the fact that we went up into this imbalance there and we gave up the ghost and attacked the sell side liquidity there, traded into the volume imbalance. Doesn't look like it's in an area where it's going to overtake this high. I don't think that's likely to occur. But if we do overshoot this a little bit, it can trade back up inside of this range here and maybe tap this low or the opening price there. It's also overlapping with mean threshold of this last up close candle, which is the highest up close candle. So this is your bearish order block. It's already dug into that range here. So we'll see, does it have a willingness to reprice even higher or not? I'm leaning to that, looking for a little bit more upside, and I'll show you the reason why when we get into lower time frames on the foreign currency. Dollar index hourly chart. Market broke down off of our trend line phantom, attacked the sell side liquidity here, consolidated, dropped down, sell side imbalance, buy side inefficiency right in here. Now we have a potential market maker buy model. Now I'm only looking at this area here for a buy side liquidity pool initially, but notice how nice and clean that is up here. Just very, very consolidated. Doesn't look like it's real jagged high and then moves away from it. So it might, if we see continuation on the upside with a much more meaningful delivery, we might be attempting to go up here eventually and trade that buy side liquidity. We had 1, 2, 3 times punching into sell side liquidity, broke above short-term high, trades back down in, volume imbalance in here, and we'll look at the 15-minute chart, also give you more detail. Comes back up into the sell side imbalance, buy side inefficiency. 15-minute time frame for the dollar index. Okay, we had the market trade back up above, and this is the volume imbalance premium high, volume imbalance discount low on the daily chart. That's what these levels are here. So we worked on the outside of that, came back down in essentially consequent encroachment, and then took out the low of London and the sell side liquidity here on this morning's news event. The data came out strong for the dollar, and we had this reaction in here. Trades back down to the last down close candle, order block there, reprices higher, institutional order flow entry drill here, and then again presses on the upside still. All right, we traded above the rejection block in here. We have the close candle, highest up close, extending out in time. We traded through that and then rejected, closing in all of the buy side imbalance, sell side inefficiency here. We're just above these 2 down close candles, so notice the gap begins right here, and then the order block starts there. So when it's like that, notice it doesn't have a whole lot of wick on the upside of that candle. So I'm liking the idea of that opening price, draw that out in time on your own chart. It's not going to be in my presentation here, but do that on your own and see if there's any sensitivity there, because this might be just coming back down in to get to a discount relative to this low and this high, and then send it higher once more and dig into this imbalance, okay, or gap, because the wicks are always treated the same way as a fair value gap. Midpoint of that is consequent encroachment, and then the actual high. All right, so we have the euro dollar. We had a 4-hour chart rejection block I mentioned yesterday in the PDF, and counsel you to take a look at that when we were on our community tab. We traded up into that and then broke down, came right back up in, right in here, we're going to take this imbalance here, but we're going to look inside this imbalance on the 15-minute time frame and extend it out in time. You can see we worked inside of that level there. Nice displacement down in, completely closed in all of this, and it looks like it may want to pump up into this area here. Disregard this wick, okay, because just pretend it's not even there. We might just run up into this area here and then have one more wave of selling, attacking the sell side liquidity here, and then we have a imbalance right there in the form of a bullish fair value gap or buy side imbalance, sell side inefficiency. And if we lose this level here, I think that we're just going to roll right over and take this out. But it's too early for that. All right, 15-minute time frame. Here's that hourly imbalance. And I said we would use the 15-minute time frame. Extend that out in time. This was actually on your charts in the PDFs. So it's not like I'm just adding that because it looks pretty. It's there. And we extend them out in time. And we trade it up into consequent encroachment of that. And also we have the fair value gap over here. Extend it out in time, and we completely close it in beautifully with a fair value gap within a larger buy side imbalance, sell side inefficiency. London high, buy side liquidity was taken here on the news event. Displacement, immediate rebalance here, trades lower, again, bearish order block, trades down. So I'm going to be watching in this area here, again, on the hourly chart. Let's go back up for a moment. Right in here is where I'm studying. So I want to see if it goes up there to create another opportunity to sell off. Sell side liquidity here. I'd rather see it drive up into that and not go down below this low first, because if it does that and then goes up there for the imbalance on the hourly chart, that might imply it needs to come back all the way up into this low, and that to me just isn't that, well, favorable. British pound versus the US dollar, or cable, daily chart. The market traded completely up into this fair value gap here and traded above its rejection block here, highest up close, extend it in time, drove up into that. We have a buy side imbalance, sell side inefficiency between this low and this candle's high. We traded down to the consequent encroachment, and we'll see if it wants to come back up. It might want to touch this level here or half of that range. Watch and see. Also revisit this low, extend it out in time. It might just hit that again and then sell off and completely close in the rest of this. The order block here and the fair value gap, watch that. We might see something around 139.45, 139.40 that cause a short-term draw on liquidity on the downside. So if we get that continuation on the upside on the dollar, I'm liking this order block here with the fair value gap as a downside draw. Hourly chart, British pound. Again, disregard this wick here. And we traded lower. So if we trade back up into this low or this down close candle's low, that might act as a breaker. And we'll see if it wants to trade lower. Watch this level here and this level right here. Down close high. It's a bullish order block. Down close and it's high with a fair value gap. That's an order block. So we have two areas of liquidity here and here that may see the breaker or mitigation block. And the reason why I don't know which one it's going to want to take here, because they're so close to one another, it could be either or really. But if it pumps up into that, rejects anything at 141 big figure or just above it or just below it, doesn't necessarily have to trade to it. I'd like to see it actually fail to go there and then break hard and trade into this level here and maybe even get here if we get that upside continuation on the dollar index, and it is potentially being, and if it's being delivered on the basis of a dollar market maker buy model. And finally on the cable 15-minute time frame, a lot of distortion when you have these wicks in here. So just kind of like imagine that this is not there, and we have a little imbalance there, and it's also that premium high on the fair value gap on the daily chart. So we can see it trade up into that, but it could really just reach in here too. I like that better than just touching that, because that would be hitting this level but leaving the gap entirely open. I don't like that. I like the idea coming up to it, just getting above this candle's high, for institutional order flow entry drill, and then rolling over and getting that. If we trade down first, then this becomes, and this right here becomes an upside draw on liquidity, and we probably won't get that upside move on the dollar. Haven't talked about equities in a while. Here is the hourly chart on S&P. So we're looking at the futures contract, and I want you to take this chart here and model your own, pulling up the ESM 2021 chart on TradingView and kind of scale it the same way here, and then go in and do what I've taught you already a couple weeks back and overlay by putting the compare tab to work on TradingView and add YM M2021 for the Dow futures and add NQM 2021 for the NASDAQ futures, and then turn them all to line charts and plot them on a line basis with the high. So you're going to be measuring the charts in the form of a line chart, but focusing on the high prices of each candle. And you're going to see an SMT divergence in here that sets up the motion going here. I'm going to counsel you, without having the chart up, I want you to go into your daily chart for S&P, E-mini S&P. Again, the symbol is ESM2021. Daily chart. Annotate the nearest volume imbalance that the market has not traded down to yet. There's actually two of them, but either one would be fine. But the nearest one in terms of where price is now in real time to where it would reach to first. In other words, what's the nearest lowest volume imbalance? Have that noted, because we'll probably end up seeing that. Maybe not this week. It can, but if not, it'll probably roll into that over the course of next week. So that, my friends, is going to be it. We'll touch base with you again tomorrow with the PDF daily log entry, and then I'm going to try to do my best to give you a really nice lesson this weekend in the weekend commentary. And until I talk to you then, be safe.